Hello, and thank you for joining this webinar from Tolley. My name is Andrew Hubbard. I'm Editor-in-Chief of Taxation Magazine. And in the next few minutes, I want to look back at some of the tax highlights of 2019 and forward to 2020. And I want in particular to bring out some of the features which I think will be of special interest to those who are in-house advisors or otherwise advising large corporates. 2019 will go down in tax history as the year in which there was no budget. As you know, we were expecting a budget at the end of the year, but the general election has overtaken events, and so we will go through the entire year without a budget. Now, the tax historians among us, and believe it or not, there are quite a few of us here at Tolley, have spent a long time poring over the books trying to find out when was the last year without a budget. And we failed. We think that since modern income tax came in 1842, there has been a budget, or at least one budget, every year. So 2019 is very special. No doubt 2020 will see at least one budget, perhaps two, who knows, perhaps three, depending on what happens on the political situation. So if there was no budget, did anything else happen in 2019? Well, of course, a number of things did happen. We start with making tax digital for VAT. That's happened in a relatively small way at the moment. And for larger companies and groups, we're only just beginning to see how MTD might play out. I think it's too early to say for large groups whether or not it will work successfully. I know that there have been a lot of issues around data capture and just the way that large groups organize themselves. My sense is that MTD has been designed for smaller businesses, one-offs and the like, and I think it really will be a test of the system to see whether or not medium and large size groups can comply with their MTD obligations. I suspect it will be a significant theme of the next 12 months. People will also, of course, be interested in when MTD will come in for corporation tax. I say when, but I think there's still a question mark over it. We've been waiting for at least a year for a consultative paper on making tax digital for corporation tax. There's been no sign of it, and I don't know yet whether or not it is still in the government's sights to do MTD for corporation tax. I think they see it as much less important than MTD for income tax. So I wouldn't hold my breath as to when MTD for corporation tax will come in. I suspect it will eventually come in, but whether it will look anything like the current models for income tax, I don't know. I know that a lot of businesses have put in a huge amount of work in preparation for MTD, and in many senses would just like the government to get on with it. But at the moment, I think we've still got an almost blank piece of paper about MTD for corporation tax. One of the things that has been, I think, very noticeable in the last few days even, is the announcement about corporation tax and the decision of the incoming Conservative government, if that is the result of the election, that the planned corporation tax cut will be scrapped. Now, this is a complete reversal of what we've had for a number of years in the corporate tax strategy of the government, going back, I think, really as far as 2010, of gradual reductions in the headline corporation tax rate. And I am surprised that this change has been made, but in a sense you can see why it is quite politically difficult to continue to reduce corporation tax rates in a time when there are so many demands on potential areas of public spending. Whether or not it will simply be that we retain the current rates, or whether or not they will drift up, who knows? A lot will, of course, depend on a change of government. But we still do have a low level of corporation tax. When I started my tax, the corporation tax rate was 52%. It's almost unimaginable now that we could have a rate of anything approaching that level. International competition would make that completely impossible. But we will be all watching out for where corporation tax rates go. And of course, it's not just the rate, it's the effective amount of corporation tax that's payable. Will there be a further tightening elsewhere, or will there be more generous reliefs? And certainly we've seen all sorts of discussion about what the ideal corporate tax system will be. I suspect that whichever government comes in after the election, we will see quite a lot of discussion about what is the ideal basis for taxing businesses. And then, of course, how one tax digital receipts, whether or not the current rules, which are temporary, will in fact last for quite a long time, or we will get a wholly new system. Clearly, again, we're into very, very political territory, but I think that the corporation tax environment could look very significantly different, perhaps not by the end of 2020, but perhaps in a couple of years after that. So the direction of travel that any new government wants to bring in will be critically important for businesses of all sizes, but clearly for large businesses, it will be very, very critical for future investment decisions. One area that has had a lot of attention this year is capital allowances. After a number of years of not very much happening, we've had two things. First of all, we've had the introduction of new structures and buildings allowance, based in many ways on the old industrial buildings allowance type rules, but more modern in the way that they operate, and clearly wider application than the old industrial buildings allowance. I think the government's done a pretty good job here in terms of preparing businesses without getting the guidance out. And I think that it will settle down as a fairly good and stable regime. But stability is clearly the important thing here, isn't it? If you are making building projects that are going to last 20, 30, 40, 50 years, you want to be able, with some degree of accuracy, to get some idea of what tax attributes you're going to have there. So having introduced this, I hope that what happens now is that settles down and we don't see lots of change for the sake of it. I don't know about you, but I've lost count of the number of times the annual investment allowance has changed. We don't want further change. The courts have been very busy with capital allowances as well. There have been a number of very important decisions. Urenco is one, and SSE, major, quite a lot of them. And although, like all capital allowances case, they are entirely fact specific and there's no easy read across, all of those cases are worth a careful read because they do show very clearly the direction in which the courts are applying some of the really difficult tests within capital allowances, such as how premises work. So capital allowance specialists are going to keep very busy in analysing the outcome of those appeals, and some of them I have no doubt will go further. But it does show, doesn't it, that you need to be really on top of what is going on in that whole area, because your funding of projects is going to be critically important to take into account of what tax reliefs you're actually going to get. So watch this space, because I think there will be some further appeals in some of those cases. Finally, I just want to mention the so-called IR35 rules as they will apply in the private sector. Now, this year, IR35 has mainly been seen through the perspective of individuals providing their services to television companies and others, and we've had the Lorraine Kelly case and the Krista Ackroyd case, or to be precise, the cases involving their companies. But clearly, from a corporate point of view, the big issue will be, from the 6th of April next year, the obligation on major corporates and large corporates to apply those rules and to account for PAY and NIC on the, shall we call it, the reward of individuals who are operating through service companies, unless you are critically certain that they are without the IR35 net. And that's a very difficult decision, and I know that some corporates have spent a huge amount of time really trying to look on a case-by-case basis of where somebody fits on the line. But these things are so difficult. These cases that have been reported, the judgments are pages and pages and pages in long, and it is just not realistic, in my experience, for businesses to have to look at that level of detail on every single engagement. Some have taken what I think is a very extreme prudent view to say that they will not engage people through service companies at all, or if they do, will apply the deemed PAYE rules. Others are trying to do it on a case-by-case basis, but given the uncertainty about that, I can quite understand why people want to err on the side of caution. There are always calls for these provisions to be relaxed, or for there to be a delay before they come in. I don't see any sign of that. I think we are going to be stuck with this new system from 6th of April. And frankly, good luck to everybody that's got to try and make really difficult decisions on these cases, bearing in mind these have enormous commercial impact about what labour force you've actually got to do the work that you need. So these are not just pure tax decisions. They go right to the heart of how the business operates. So that's a little thoughts about last year and what we may see next year. And I've got so far without saying the word Brexit, and I think you hope that I wouldn't. I will say Brexit. I wish I knew what impact Brexit will have, but until we know what the exit agreement, if there is one, will be, it's very difficult to tell. And of course, even if we do get an agreed Brexit, then there's going to be at least a year of very hard negotiation on precisely what it means and what our future trading relationship will be with the EU and countries around the world. It will certainly keep us very busy as publishers, trying to keep up with all of the changes that have already been made and those that will come. And I suspect it will keep you all very busy in terms of trying to understand how you're going to run your business in very, very different times. So on that, perhaps not very cheerful note, can I just say thank you for listening. May I wish you a happy Christmas and be the first to wish you a very good, happy new tax year. Thank you very much.